Hello, Oracles. Well, we've got a couple of big things to talk about today. First is going to be price cuts that we just saw in China. Saw some pretty massive price cuts. I think we're going to see some coming here in the US. We'll dive into that in a minute. And then some pipeline information. So we know that we have Investor Day coming up on March 1st. We are looking forward to seeing what the Generation 3 platform looks like. And Herbert last night gave us some insight as to what we might be seeing in the future for some other vehicles. So we'll jump right into it now. So with the China price cuts that we saw yesterday, we saw the Model 3 rear-wheel drive dropping 11.7%. The Model 3 Performance dropped by 5.7%. The Model Y Standard Range dropped by 10%. The Model Y Long Range dropped by 13.4%. And the Model Y Performance dropped by 9.5%. These are massive price cuts, but you have to remember that the prices went up significantly more than that over the last 2 years due to COVID, supply chain issues, and in particular demand. Demand was so high for the vehicles, they kept on going up on the prices just to be able to keep demand at a reasonable level. Now, the demand obviously going into a recessionary time has come down, so Tesla will then in turn come down on the prices. This is what we have talked about all year long. This is what we call pricing power. Now, looking at sales over in China itself, GM sales last year were down 21% year over year. That's massive. Now, GM does sell more vehicles over there than Tesla, but they're ICE vehicles. And so this just shows the massive shift from ICE vehicles to EVs. And now I'm also looking over here in the US, and I happen to look at the inventory. Inventory levels are building back up again on the Model 3 and the Model Y in the areas around me. And you guys can let me know in the comments below if you also see more vehicles in inventory in your areas. I'm anticipating we will be seeing price cuts coming here in the US in the near future as well. So again, the US also saw prices go up significantly. We saw the Model Y Long Range was under $50,000 just a little over a year ago. So, that's a $16,000 increase in just a year. So they can certainly come down on these. And it makes sense for the EV tax credit. So Tesla right now, I'm sure, is just trying to figure out what the right pricing is. I would think somewhere around that $49,000 to $50,000 level. So if people wanted to upgrade paint or wheels or something, they can still get that and still get the EV tax credit. So we may see something like this. And then as we were talking with Herbert last night, there could be a bunch of software unlock features that come as well. And so of course the question we've been having lately is Tesla just a car company? Looking at the way the entire industry is moving in the future, the entire industry is moving into a situation where the vehicle itself is going to be like a smartphone, and it's all going to be software based, and Tesla is going to be providing that software, very Apple-esque. And this is one of the main reasons why I think we see such a massive disconnect in the stock price right now. We have people that are valuating the company itself as a car company, but we know in the future it is going to be valued as a tech company, and even more, could be energy, could be AI, which doesn't even have real valuation on it right now. So many other things that are coming for Tesla in the future, but right now, because of the macro environment that we're in, we're only being priced as a car company. And as Herbert mentioned last night on the live stream, this could be something where Tesla ends up shifting their focus from right now, where we saw last 2 years, they focused all of their energy on EVs, especially the Model 3 and the Model Y, to get those ramped up and really boost those sales because demand was so high. And so going into this year, if we are going to see demand coming down on vehicles, we now have a demand push for energy. Megapacks are sold out into 2024, so Tesla can focus their energy on energy. And then this way they can really drive that portion of the business. And this is one of the great things about Tesla because of their versatility. They can now shift focus and say, all right, we still obviously want to make sure the EV portion of the business is going well, but we have different things that we can do here to just keep on that going on the path it's on. And then we can also focus our resources and energy on the areas that are in high demand right now and really drive that demand. Pierre Ferragu had a tweet that came out saying that Tesla right now, if they came down 8% on average selling price, they would increase their total addressable market by 50%. That's huge. And in a recessionary time, demand can drop by 10 to 15%. So this means that they could potentially increase their market by 36% year over year. So obviously we know that Tesla was focusing on 50%. We know that in order for them to achieve 20 million vehicles by 2030, they need to have average compounded growth of 40% year over year from here on out. So having 36% during a recessionary year where demand is getting squashed by 10 to 15% is massive to see during these times, because then coming out of it, we have that better opportunity to really push even stronger. And while we are seeing sentiment in the retail community kind of, falling down a little bit, you start looking at analysts and institutions, and their sentiment is changing in the other direction. We've got Cathie Wood from ARK still buying the crap out of Tesla. Nearly every single day they are buying more and more Tesla. As of the time of this recording, we are down to almost $104. It keeps on falling, but people keep on buying because that's what you do during these times. Now, it's not financial advice. I'm not saying go all in, but I've been dollar cost averaging all the way down. If we hit this $100 mark, which I think we will, and maybe we even hit it today, I will deploy 25% more of my cash into the stock. I don't know how much further down we're going to go. Recessionary times are very unknown, but looking at the future and where it's going to be going, this is a massive disconnect. We even have Jeff Windau from Edward Jones and raising the rating from hold to buy. This is something they have never done before. They don't do price targets, but the fact that they are now seeing Tesla as a buy, for reasons saying that they believe Tesla's new product launches will allow it to take advantage of this expanding market, and the share price does not reflect its long-term growth opportunity. Again, it's very disconnected. So they see the long-term growth opportunity. Right now, that price is very disconnected from that. So when we see analysts like this changing, and that's when it comes to analysts and their different ratings, that's what I pay attention to. Price targets can be all over the place based upon valuations. Right now, the majority of the price targets are still at 2 to 2.5x within the next 12 months. So that's pretty big. But with that taken out, just looking at these analysts that are upgrading their ratings on it tell me that the price is now coming down to values that they feel are more purchasable. So this could be something like a Warren Buffett, who's a value play guy. I don't know what his price target would be to be able to make Tesla be a buy. Maybe it's $80, maybe it's $60. Whatever it is, when it comes to these analysts, we see those upgrades coming because, now they see, all right, this price right here is going to give me a good return on my investment. So the more we see the price come down, the more we see analysts change because they all now feel that, yes, the return on our investment is going to be as good as we want it to be, and now we can go ahead and invest in this. So these are the things that I pay attention to because more and more people are saying Tesla long-term is going to be good, and Tesla at these prices is going to give us a great return on our investment. And so now when he comes out and says that, with their product launches that are coming up, we know that the Semi just got released. We know that the Cybertruck is coming out, but we've known about the Cybertruck and the Semi for quite a while now. So with him talking about this, does he know something that we don't know? We have Investor Day coming up on March 1st. We know they're going to be unveiling the Generation 3 platform. It's most likely going to be a modular platform. Elon said it's going to be a smaller form factor and less expensive. I don't know if that's what ties into Project Highland, but in talking with Herbert last night, he had an awesome opportunity to actually speak with Elon and Kimball and Franz von Holzhausen. And Franz is the director of design for all of their vehicles. And Franz said he's most excited about a vehicle they haven't even released yet. So people didn't know what it was. Maybe it was the Cybertruck. Well, Herbert happened to talk to him and he said it was not the Cybertruck. So around that same time, Elon had also tweeted out about a highly configurable van, a Cybervan. So I don't know if this is what the Generation 3 platform is going to be. I don't know if this is what Franz was most excited about. As the director of design, I would think that the highly configurable van would be a design director's dream. That has to be, I would think, his number one. But again, we don't know for sure, but we are going to be seeing this product pipeline, and we're going to see their future growth expansions that are going to be coming up at Investor Day. We're going to be able to see more of what the future is all about. That's what a lot of us have been waiting for. We're kind of in a time right now where we haven't heard much from Tesla about the future. We've kind of lost that excitement, and part of that, with the stock price coming down, we don't have that extra little, sugar jolt to kind of bump us back up again. We need that, and we're going to see that. And then at the same time, we also need to see this execution, because we're going to have a lot of people say, well, yeah, you told us about the Cybertruck in 2019. It's still not here yet. You told us about FSD was going to be solved in 2020. Still not here yet. So sure, you can tell us about the future plans of expansion for the company, but show me proof of the ones that you had already told us about before. We are going to see that. I have faith we are going to be seeing the Cybertruck coming out this year. I have faith that we are going to be seeing significant improvements in FSD this year as well. So things are going to start coming to fruition, but to be able to see what Tesla is going to be doing for the future is even more important, because for those of us who understand that, as Herbert said, there's not really a specific deadline for these things. There's a tentative timeline that we want to be on. I mean, think about yourself when you're working on a project. If you don't have a specific deadline that the project has to be done by, you give yourself a deadline and say, I would like to be done with this by then. But if you're not done with it by then, do you just stop doing it and give up? No, you just keep on doing it. But that timeline and that deadline that you gave yourself gives you that incentive to really work hard to be able to achieve it by that deadline. That's really what this is all about. Elon kind of has an open-ended time frame for things to get done. He just wants to transition the world to renewable energy. He wants to do it as soon as possible. In order to do that, you have to put aggressive timelines on things, because when you put those aggressive timelines on things, it forces everyone to work faster to get you closer to that. It goes back to a quote that he had said a long time ago, which is, take a plan that you had that you think is going to take 10 years and say you're going to do it in 6 months. There's a good chance you're not going to achieve it in 6 months, but I guarantee you're going to get it done a lot faster than someone who thought they were going to take 10 years to make it happen. That's really what it's all about, is you give yourself aggressive timelines, you're going to get it done faster than everyone else because you gave yourself more aggressive deadlines. That's really where we're kind of at with this right now. And so being able to see this at Investor Day, to see, hey, this is what's in the pipeline, this is what we have planned for the future, this is what we want to see, we can then say, all right, we see this coming. Tesla has proven that they do accomplish these things. It's just maybe sometimes not in the time frame that they had told us, but they do make it happen. That's just kind of the mindset that I have when I'm investing in Tesla, is these things will happen. It's just a matter of when. Sometimes they happen sooner, sometimes they happen later. That's all it is. So you guys can let me know in the comments below what you think we are going to be seeing from this pipeline. Do you think we are going to see massive expansions? What do you think we're going to be seeing for factories? Because that's a big piece that's coming out of this as well. Herbert had mentioned a megapack factory coming as well. That I like to see. Maybe we're going to see something in Australia. We know that Australia right now is in a place where they're putting up a lot of megapacks. So maybe that's the ideal place to put a factory. You have something over in the Asia Pacific region. Again, we don't know for sure any of this. We haven't gotten confirmation. All of this is, of course, speculation, but it just makes a lot of sense for Tesla to be moving in this direction. And so for people who are kind of thinking right now of Tesla's going bankrupt, Tesla's going to be taken private, Tesla's going to be completely failing and they're not going to be around in 3 years. Like, that's a very silly mindset to have for a company who has no debt, major cash flow coming in, and a giant stockpile of cash to get through this. They are positioned perfectly to be able to get through a recession, and they have all the tools needed to be able to bring pricing down on their vehicles to increase demand as well. Of course, this goes back to what Omar had said about the vehicle being really a software platform, which is we just want to get as many of these vehicles into people's driveways as possible, because then they can go ahead and add all that extra software, that high margin stuff later on. They can keep on adding, and they can just keep adding to it. It's not just a one-time purchase. We'll have subscriptions for FSD, subscriptions for all sorts of different software in the vehicle. This is where all of that money is going to be coming from. So even if Tesla sold these vehicles at cost, getting more of them out there is going to mean longer-term profits for the company. So again, stock price coming down right now. Yeah, I know it stinks. We've been through it before. We've been discussing it all year long. I hate seeing my portfolio come down. But just put that little thought in your head. Of course, it's not guaranteed, but thinking about buying the stock at these prices, knowing that we will get back to all-time highs in the future, would you like that return on your investment? A lot of analysts and institutions are feeling that, yes, they believe that is a good return on their investment. You guys can let me know in the comments below if you think that it's going to be a good return on your investment. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat, that link is down in the description, and if you'd like to support the channel any further, we do have a membership program and a Patreon. Those links are also in the description. Thank you so much. Have a great one.